The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another market this month in August of 2025. I'm, of course, joined today by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. In this month's episode, we're diving into how August has been shaped by trade tensions, shifting commodities, and renewed momentum in the cannabis sector. Canadian employment numbers are down, and while tariffs keep piling up, the economists say the economy is holding together better than we expected, though cracks are beginning to show. In response, the government has rolled out programs to support tariff-affected workers and is accelerating both defense and infrastructure spending. It's worth noting that 85% of Canada's trade with the U.S. remains tariff-free, though. However, in July, President Trump raised tariffs to 35% on Canadian goods that are not compliant with Canada-U.S.-Mexico agreement. Meanwhile, in cannabis stocks are sparking renewed interest after Trump said on August 11th that his administration is considering reclassifying marijuana to a less dangerous Schedule III drug. Currently, marijuana is a Schedule I substance, classified alongside heroin as highly dangerous, addictive, and without medical use, where it's been since the Controlled Substance Act was signed in 1970. Although 45 states have legalized marijuana for medical or recreational use, federal law still treats it as a top-tiered controlled substance. If reclassified, marijuana will be regulated more like Tylenol with codeine or anabolic steroids, prescription only, but available through licensed healthcare providers and pharmacies. This would mark the most significant shift in federal marijuana policy in over 50 years in the United States. Reclassification wouldn't legalize recreational use nationwide, but it would reshape the regulation and taxation. For example, businesses currently barred from claiming federal tax deductions under Section 280E would gain access to significant tax savings, boosting profitability for licensed operators. It could also unlock easier access for clinical research, long stifled under Schedule I restrictions. However, banking and payment barriers would likely persist. Most banks avoid businesses due to federal penalties, and according to a Congressional Research Service report, scheduling alone is unlikely to change that. We'll break down what all of this means for the markets, check in on gold and copper and oil, and explore why cannabis could be on the verge of another major revelation. Let's dive in. Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another market this month. We are talking here in August of 2025, and I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, thanks for having me, Anna. We were talking in the green room there about how I can't believe summer is almost over. It's kind of sad how fast it's flown by.
It has flown by, and Bruce, I think we'll talk about this today, but the markets have been quite busy for the summertime. Normally, there's not as much to talk about, but it's been a busy summer in the markets, hasn't it?
It sure has. I mean, between financings and activity, it hasn't given us much time to put our feet up and relax.
Absolutely. We're going to get into some of those numbers this episode. It's pretty exciting stuff. So let's dive into it. We're going to talk about tariffs again because that's just a part of our reality these days. But I think one thing that you wanted to touch on is kind of what is the ripple effect that's happening on tariffs? What are the economics of what's happening with the tariff life in Canada?
I mean, we've seen some real mixed numbers, right? So if you look at employment numbers, they were certainly weaker than what the consensus was expecting when they just recently came out here, the early part of August, which is clearly disappointing. That's had an impact. I mean, there's a lot of companies that still are kind of in that holding pattern. They don't know what to do because the tariffs are reduced and then they're back up, and it's it really kind of jams up businesses for sure. I know that in the U.S. though, the interesting thing is that the small business sentiment has increased over the last month, and it's increased now above the long-term average, which is good to see, because if that that a lot of hesitancy because of and sort of negative sentiment because of the fact that the tariffs were imposed and they, most business people didn't know what that meant. And now, as we're starting to get a little bit more clarity in the US, that started to help business sentiment. And then hopefully we can get some clarity in Canada. And then once businesses have, a framework for which they can work in, then it's just a function of, that's the new operating manual that they have to run with. And most people are quite good at adapting from a business perspective. It's just the uncertainty of not knowing, like, are they on and how much and, where are they coming from and things like that. So it'll be nice to get that uncertainty dealt with. And hopefully that can, happen over the next few months here.
I mean, look, I think on a global level, we all sit and watch, and we're never really sure what Trump is going to do next, and that creates a lot of uncertainty, right?
Yeah, 100%. And I mean, day to day, you kind of never know what's going to come and what direction that's going to come from. Not just tariffs, but there's so many other things. There's been lots of criticism of Fed. There's been, obviously geopolitical items that come out. There's been, kind of these different events as far as getting taxes on chip sales to China. It just never seems to end, and it's quite the flurry of activity. And you have to really be paying attention to know what today's news is versus what it was 2 days ago.
That's right. There was one economist that works for one of the big banks that came out recently and said, well, we're not dealing with the worst case scenario, which I thought was very warming thoughts. So we're not in Canada dealing with the worst case scenario of the fallout of these tariffs, and hopefully we continue to not see the worst case scenario.
Yeah, exactly.
All right. Well, we'll keep watching that. I mean, obviously, I think the markets generally are always they're always going to do a little bit of a reawakening in September when everyone goes back to reality. So we'll see what happens in the fall. Okay, let's talk about commodities again. Again, this is a monthly thing we talk about. Gold has been holding strong. It's been quite a fantastic year to watch gold. And I know copper and oil, they're not holding some of the levels that they were. So let's dive into that.
Yeah, for sure. I mean, kind of the overlying theme is that the US dollar continues to still be relatively weak, right? I mean, it hit a top, for the year back in kind of the February timeframe and has since declined. And I mean, that certainly helps risk assets. It also helps gold because there's historically been a inverse correlation between the two. And, the one thing that is a little bit kind of puzzling is the move in oil for sure. And that, we saw oil kind of moving up and then it's recently pulled back. And what we would, most investors would like to see for sure is that not oil spike up, but that it see a kind of steady incline, because that's indicating that there's economic activity that's using up that oil that's out there. At the same time, we have seen, OPEC increasing their supply, and I think that that's certainly a political pressure that they're getting, I would imagine, from the U.S. to keep oil within range, just because, everyone's so focused still on inflation, and that's a fairly big impact on inflation as it directly impacts, but also trickles through. So that's kind of been important, and we're watching it from a number of different perspectives, both from an investment perspective, but also from an economic perspective. And then copper's kind of the same, right? I mean, it had a fairly strong move up during the year, and then some of the news out from President Trump, and had probably, I think it might have been, if it wasn't the biggest drop in 1 day history or 2 days, it was certainly right up there. And I mean, it's settled back down, and it's going to be interesting to see kind of where it goes from a record high to being down over 20%. So it has been it's been challenging for sure in the commodity markets.
Again, it'll be interesting to see what happens in September. Sometimes it's an odd one this summer because normally we see, some of these depressed levels that happen naturally in the summertime. But it's also been such a busy summer; it's hard to tell how much this is going to stick. Do you think that we're going to see some more strength in the fall?
Well, certainly that would be, that would be the way things have been trending as of right now. And we saw the April lows in the markets and also, several of the commodities. And then as the tariffs have walked back, things have continued to improve. And the latest, which we'll touch on in a second, is the interest rates and kind of what the expectation is there. July and August can kind of be, a little bit wild cards. They tend to have lower volume, and so markets tend to sort of drift in the direction that they've been going, and they have gone up in both July and now to where we are in August. September and October tend to be weaker months. That's looking at it from a historical perspective, and that's going to be the really interesting tell is like when the majority of investors get back to their desks after being away for summer. Do they look at things and are they assessing whether or not there's going to be some type of economic slowdown or other type of event that's going to cause earnings to be depressed and the market to go down? And so that's going to be really interesting to see. Certainly, we're not seeing that tell right now, but it's something you always got to be keeping your eye on.
Yeah, absolutely. Okay. Okay, well let's hop into we'll talk a little bit about why don't we actually talk about rates next, just to dive into that because you mentioned it. What are the expectations for rates? Are they going up? Are they going down? When are we going to see that happen?
Yeah, I mean, the expectation in the US for sure is that rates are going to drop, and it's now a fairly high probability. So there's multiple different surveys that are done to try to determine what investors' perceptions are on rate increases or decreases and what the probability of that is. And just recently, that has gone to almost a 90, I think it's 96% probability as of today that interest rates are going to be lowered in the September Fed meeting. And that there's a couple of factors that sort of go into that, but one of them has been, inflation, and that the inflation numbers that were released earlier this week for July were actually up, but they were a little bit tamer than what the market expected, which allows the Fed some room to lower rates. At the same time, there's been a tremendous amount of political pressure on Jerome Powell to lower rates. President Trump has been all over him. And then even this morning, I saw an interview with Scott Bessent, who's the Treasury Secretary, and he was talking about how they should be 150 to 175 basis points, or 1.5 to 1.75% lower than where they are right now.
Wow.
So he's getting a lot of pressure to put rates down, and there's a lot of name calling that's going on. He's being referred to as Jerome Too Late Powell and things like that. And so he is getting a lot of political pressure. At the same time, he has to monitor, and he's got his own mandate as far as inflation and employment goes. And so he's got to balance those two, because he knows if he starts lowering rates too fast, it could mean that we get inflation back. And nobody wants to see that, especially after what we went through, kind of going back 3 years ago.
So I was just actually going to bring that up, on that note is there was a time in Market Recap where we talked about inflation, weekly, you and I. It's not something we've talked about a lot. So obviously, both in the US and Canada, there has been some correction in inflation. Is that right?
Yeah. So, I mean, back when we were talking about it all the time, it went to 9% and then has slowly worked its way back down and now is sub 3%. It's like, kind of in the 2.7% annualized rate. So that's like the rate of inflation
spot,
from
right?
1 year to the next. Yeah. So it's not like it's dropped down or anything like that. I mean, from a year ago is up, or what we're basically paying is up around 2.7% from where it was. What we're going to see, though, probably in the next few months is that starts to inch its way back up to around 3%. 3% is not too bad, of course. That's kind of, that historical rate is kind of like that 2 to 3% range. But of course, we all have probably a little bit of scar tissue from the high inflation that we saw at 9%. And in some goods, they were doubled in price. And nobody wants to go back to that because it just erodes purchasing power for everyone and is difficult for everybody to keep up to. And so there's a balance between full employment, which requires lower rates, and keeping rates at a certain level so that we don't get too much inflation.
Okay, well, I mean, it feels like it's a bit of a yo-yo. It felt like rates really they were at a certain level without much movement for quite some time. And it's definitely been an interesting few years in the rates going up and down. So it'll be interesting to see if they do get cut. And then, of course, if they come down in the US, typically what we see after that is that the Canadian rates go down as well. Is that right?
Not always. I mean, it will be, our Bank of Canada acts completely independently of the Federal Reserve in the US. And of course, they have to look at what's happening here domestically. So they're looking, and again, trying to balance inflation with employment and economic growth. And I mean, there's a strong chance that they could be lowering rates in the future as well, because we're not seeing the strong economy, and inflation's actually probably been a little bit lower here in Canada than it has been in the US. So it probably gives them a little bit of room to lower rates. The one thing about, most central bankers is they tend to be conservative in what they do. They don't, unless it's almost a crisis where, so when we had the high inflation, they raised rates really quickly. Or if we were to see some type of, massive economic decline where they lower rates, in a rapid fashion to try to spur on things, generally they move, kind of in a very slow and methodical way.
Yeah. Okay. Okay. Well, we'll see what happens there in September. Okay. Let's talk about cannabis. We don't talk about cannabis a lot anymore. There was a period of time where, again, like inflation, it was something we talked about weekly. So Trump came out on August 11th and said that he's looking at, who knows what that means, potentially changing the schedule of cannabis at a federal level in the United States. So tell us your thoughts there.
Yeah, I mean, this has been off again, on again sector for a number of years. And I mean, the challenge with the sector is that we know the market itself is massive, and we know that the product is the demand for the product is certainly there, both from a legal perspective and from a black market perspective. The challenge has been for many of these companies is access to capital so that they can grow their businesses, but also the taxation that they pay. There's a tax in the US called 280E, which refers to illegal substances. There was a court case where there was a drug trafficker who filed his taxes as if he was just a regular business, but he was writing off all his expenses. And when they eventually caught up to what he was doing, they said, whoa, 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 you can't write off your business expenses. This is an illegal product. And so they imposed this 280E, which means that the normal cost of business activities that most businesses have that are able to write off, they can't do that with 280E. So it just means that their costs are really depressed. So they have to pay for those costs, and their taxes are a lot higher than what another business that was outside of cannabis would be. And so this would, if they reclassified it, would actually allow those two things. One is that they would no longer have to pay the 280E, at least for sure on the medical side. There's still some uncertainty as to whether or not that would be the recreational side. And then the second thing is it would most likely open up access to capital, because now you're going to have banks that would look at it from a different perspective. It's an illegal controlled substance. It's now a legal controlled substance. And so they would be able to lend money perhaps to some of these cannabis companies, and then they'd be able to grow and increase their market share. So it would be profitable, and at the same time, they'd be able to raise money.
And to just touch on that too, I mean, the CSC has obviously seen over the years a wonderful cannabis space evolve on our marketplace. One of the reasons that it's evolved so much and so big is because also U.S. cannabis companies that touch the plant are not allowed to list on a U.S. stock exchange, which is why we've seen so many of them come to the CSC. That would change that as well, potentially, wouldn't it?
It could, yeah, for sure. I mean, there's some talk that if it was reclassified, then at that point in time, they could get banking. And with the banking, that would allow them to list on a US stock exchange. Yeah. It's a bit of a gray area. It's not 100% defined that if this happens, that happens. Right. But certainly that's the interpretation that a lot of market watchers have when they look at this and they sort of look at the politics of it all.
I mean, if that happens, I think people maybe don't completely understand the exact scope and size of the U.S. Capital pools, but I believe the numbers are somewhere around, on a global level, the U.S. Equity capital is somewhere just over 60%, and Canada is somewhere between 3 and 4. It really would open up massive pools of capital for the cannabis space, don't you think?
It would for sure. Yeah, you'd have, you should get like bigger institutional ownership then in the sector, because what's happened is a lot of custodians um, don't allow investors to hold cannabis stocks in their accounts at those custodians because it's deemed to be federally illegal and also Schedule One substance. And so as a result, they don't want to go near it. They can't bank it, and it's really challenging. That could be also a change that happens.
Yeah. The other thing is, I mean, when we started this conversation years ago, you and I, Bruce, is I was actually surprised to see, I believe it's now 45 states. It's either recreational or medicinal. It is legal, which is pretty much the United States of America. So at some point, it seems like it may just have to go there. It does also seem like, from a political perspective, this is something that gets thrown into the ring and pulled out of the ring on a regular basis at the whim of political parties, to be used for whatever reason. So my hopes are up, but who knows what that means.
Yeah, it's certainly been challenging for investors. The amount of political swing that the industry can have is immense, just as the view that it's going to be regulated or change the regulations in some way. The optimism builds, and then what's happened is the rug gets pulled, and then woof, the sector crashes. And so many people now have just like completely said like it's an uninvestable sector, and are completely staying away. And I mean, that's where eventually the opportunity will lie, is that when it does actually change, and it will at some point in time. It just, we don't know if that's a year from now or 10 years from now or more. But when it does eventually change, it will really revolutionize the industry and allow, for big changes.
Yeah, I was gonna say, I mean, the smart money has been the ones jumping in there every time this gets thrown into the ring, because when it does go through, it will be a massive shift within that sector. So people are maybe getting a little tired of the step in, step out situation, but there is a reason for it, and it will definitely change the sector. So, and it's so wonderful the CSE gets to be such a big participant of it. We have such wonderful companies that have grown, raised capital for years now, and done some really fantastic work as far as the sector goes. So excited for them when that does happen. Okay, so let's talk about the small cap space. It's been a great summer for the small caps. Tell us more.
Yeah, I mean, one of the things that we've kind of talked about in the past is that, when we came through the pandemic and then this inflation happened to the degree that it did, a couple of things that happened were that we saw the interest rates increase at one of the fastest rates in history, certainly in most people who have invested or been investors' history. And then the second thing is that we saw the money supply go negative as far as a rate of change goes. It wasn't mean that the money supply was negative, but just the rate of change was negative. So there was less money being created and in the system from a rate of change perspective. And that's something that no one who's investing on the planet right now has ever experienced. Certainly, if you were, well into your hundreds, you would have experienced it in life, but you wouldn't have been an investor back then. And so what that means is that most small caps were in a really challenging environment for their business. And then at the same time, for their access to capital. And that's now really started to change. So we've seen rates starting to trickle their way down. So we've seen a few rate decreases. And then we've seen the rate of change of money supply going positive. And so what that means is that now investors are starting to look for earnings. And the earnings that we saw in the smaller sectors, small cap sectors, and sort of medium small cap companies was we really saw a recession in that area over the last few years, and that's now started to change, and we've seen earnings starting to ramp up and starting to increase as they have increase in their businesses, increase access to capital, and investors take note of that. And of course, they're following and watching earnings, and they go to where those earnings are accelerating, and that's been the small cap area as well. In Canada, our small caps tend to be led by commodities. With the fact that gold has done so well, you're starting to see some trickle down now into other commodities. Lithium has started to, it's certainly come off the canvas and is now starting to move back up. And so those are a lot of constituents in the small cap indices in Canada. And so you're starting to see that start to really move. The TSX Venture Exchange is, considerably off its highs. So is the CSE Composite. It's considerably off its highs, but they've both made fairly significant moves off the bottom for sure.
Yeah, which is fantastic. And quite often you need that initial jump off the bottom to really kind of get the market moving. Just to touch on what we saw this summer at the CSE, in June, there was 101 financings that totaled 132 million in capital that was raised for CSE listed issuers. In July, we saw 91 financings that totaled 595 million in financings. It was a busy summer for CSE issuers. You put those two numbers together, that's about 200 issuers out of the 745 that we have listed. That's a busy summer for CSE issuers. That's pretty amazing.
Yeah, and a fair bit of money that was raised as well.
Absolutely. Absolutely. I think I was actually doing a presentation this week, and I believe that over the past 12 months, I think the number somewhere around 940 financings have been closed in 12 months. We have 745 companies. So our companies are very active right now, which is really great to see. I know it's been a very difficult market. Probably a lot of these financings are smaller financings, for the company to deal with their corporate governance needs and to kind of keep afloat. Some are going to be for some smaller work programs, but it's still activity. It's not zombie land that we're dealing with. So I have good faith that that there'll be some great activity in the fall. What do you think?
I mean, certainly that's a trend. And when you see the summer this strong, it tends to lead into, some activity in the fall that's going to be stronger, because a lot of financings are often held in the summer just because they're concerned about the lack of access to investors because they're not at their desks. And so I wouldn't be surprised if you saw that trend continue through the fall.
We also don't typically see a lot of these financings occur in June and July in the resource sector because they are actively up at the property doing work programs. So you don't see it as often. You normally see it in the spring where they get their money for the work program. They're busy in the summer, and then in the fall we get the results from those programs, and then they're out there raising capital again. I think it's all good news, and hopefully we continue to see that trend as we go into the fall season. Just to touch on some CSE issuer news, we had a few new issuers that joined us over the past month. So welcome Trimera Metals Corp, Rush Gold Corp, and Gold Canna Resources. As you can tell from those names, these are all resource sector companies. I mean, Bruce, we've talked about it so much. The resource sector continues to be the front runner in what's happening in the markets. One thing I did want to ask you, though, is that we've had a flurry of activity in the crypto space. What's your thoughts there? What are you seeing?
Yeah, I mean, we continue to see more adoption of crypto into a number of different vehicles. There's a lot of ETFs that have been created that are now holders of crypto, but now you've also seen a lot of companies where they're holding crypto on their balance sheet, or that's what they've turned their business plan into, which is, also kind of interesting. It's interesting, and I also find it a little bit on the, kind of cautious side. I'm just watching to see how this trend continues. Certainly, there was a number of front runners that were doing this, and now a lot of people are jumping in, and you kind of have to wonder, like, is it a longer term strategy or not? Certainly, if crypto continues to appreciate, then having crypto assets on your balance sheet is going to help you. But if that's your sole business, you do have to, really be careful that, everyone's doing it the right way and that you're paying the proper valuation for them holding it on their balance sheet.
I mean, it seems to make sense to me that we're seeing kind of in what's percolating as a decent resource sector is to see kind of crypto percolating as well, because I think what we've seen in the crypto space is traditionally people are hedging with having both of those on their balance sheet. So welcome to the new companies that joined in the resource sector, and I think we'll continue to see both continue to develop. One financing I wanted to mention, we actually talked about this company in the spring, but I thought it was quite a wonderful financing. Dragonfly Inc., we talked about them in May, closed a $25 million US registered direct offering on their NASDAQ listing. They raised 3.6 in May. They're a pioneer in drone solutions, AI-driven software, and robotics, delivering innovative technology for public safety, agriculture, industrial inspections, security, mapping, and surveying for over 25 years. I thought this was, first of all, congratulations to them. It's great financing, especially after they just did, a decent-sized one in the spring. But it's also nice to see our issuers that are successfully raising these kind of numbers in the US, because I think with all of this tariff talk and with the cross-border stuff where we had such an open relationship between our two markets specifically, there's obviously been some concern of Canadian issuers being able to raise capital down in the US. What are your thoughts on that?
I mean, it never hurts when you see that type of activity, especially when Canadian companies can access US capital and vice versa. It's, the flow of capital is what you want to see. The bigger and the broader markets are, then generally the best opportunities are found by investors.
Yeah, absolutely. Okay, Bruce, on that note, as we go into our last weeks of summer, what are you going to leave us with? What should we think about before you and I can connect next month?
Yeah, I mean, the big thing is going to be, watching what happens from an economic and tariff standpoint, and then interest rates, what we see there, and how that impacts the markets and the perception and the economy.
Absolutely. Well, Bruce, it's always so great to see you. I'm hoping next month that I can get you to Vancouver here in person, and we can do this face to face. In the meantime, enjoy the rest of those sunny days out in Kelowna.
Yeah, thanks so much.
Thank you. We'll see you next month.